Deepesh Patel, editor at Trade Finance Global. Today we're delighted to be at Limassol, Cyprus for ITFA's 50th annual conference. I'm delighted to be joined by the chairman of ITFA and also Trade Finance Global's new member of our editorial board. Sean, welcome to Trade Finance Talks.
Thank you very much. Pleasure as always to be with you, Deepesh.
Absolutely. So I'm going to do what we do every year, which is trying to sum up a huge conference covering lots of topics.
And we're only halfway through, of course, as we record this.
Yeah. So in 6 minutes. So you're going to have to anticipate what's to come,
okay.
and also summarise kind of what's happened over the last couple of days. So 6 themes. The first theme I'd like you to discuss. So what are the key themes? What are the opportunities? What are the challenges? Let's start with trade finance as an investable asset class. What can be done to further demystify trade finance as an asset class, particularly to those sectors that aren't necessarily directly involved in the industry?
Yeah, so what we're finding is actually trade is a very attractive, uncorrelated asset class. And there are certain people who understand what that means. There are very few pure trade finance funds. A lot of the problem, a lot of the reason for that is our low yields. That's partly an interest rate, partly an origination issue, but also the problem is that they don't understand the loss of what to them seem like very exotic structures. Supply chain finance, even some letters of credit. There are different kinds of letters of credit, believe it or not, and they find it difficult. So education is really important on that. So just this week on trade as a new asset class, we've launched 3 guides. One is a very long, 30-page securitization guide. The second one is what investors are looking for. And thirdly, we have what we're calling the rules of the game, which is what sort of documentation are we going to need. So it's very much still a work in progress. These reports are just setting out our positions, and there's further to come from them. But it's very important. We've had 2 conferences now that we've co-run with BCR, the TIF conference, the Trade Investment Forum. It's getting more and more attendance, but it is a difficult nut to crack.
And of course, a new member of your board, Mr. Swaroop, who will be leading some of that work.
That's right. Yeah. So he came in as already the leader of the ITFA group.
Yeah.
ITFA is the ITFA Trade Finance Investment Ecosystem, which has been going for a couple of years now.
Brilliant. Now I want to challenge you on sustainability because we talked about this last year. My question is, what's changed? What's
changed? In a way, nothing has changed and everything has changed. There is a lot more legislation, regulation, and we're actually trying to help our members get to grips with that. So, in fact, this afternoon, we have our ESG working group, what we've called the Audit Council. We've got a group of about a dozen banks together who are funding an initiative to create common reporting standards. So we understand what it is the regulators want, because there's a huge amount there's so much regulation around that sometimes even the regulators don't know what they want the banks to report on. If a bank doesn't know what it's going to report on, it doesn't know to what standard to hold itself. So what is the applicable benchmark? There are lots. We did some AI research, I think around 20 annual statements, each of which are by major banks, each of which have an ESG statement, and there was at least a dozen different standards that they were reporting to. So there's no homogeneity across the sector. Mm-hmm. So that's what we're trying to do in that group, and that's something that's taken us a little while to kick off, to get our hands around, but we're starting to get going on that one.
Well, we had Rebecca Harding here earlier on Trade Finance Talks TV, so we'll be following the updates closely.
And she's leading that for us.
Good to know. Now, digitization and also digitalization, always an important topic. Yes. I think it's been an important topic for the past five years or so. What's different?
What's different is steady progress, mm-hmm. right? There's no one thing that has happened that wasn't around last year, but there's more of it, and there's more different sectors. So we know the different parts of trade that are being digitized. So we know about the digital islands idiom. I now call it the digital archipelago. In other words, there's a lot of little islands. They're still islands, but there's a lot more of them. They're more self-contained, and they are starting to get bridged. But there's so you can see across and very interesting discussions about, for example, you can digitize an instrument, say a promissory note, or a bill of exchange or a bill of lading, but if you can't feed that into some sort of digital system, whether it be a platform or some sort of wider ecosystem, then you haven't digitalized. But what we're finding is the building blocks are beginning to become very secure. We've got a number of, all of whom are here, a number of suppliers of the new sort of breed of digital trade documents. Of course, we've got the law has changed, and that has helped a lot. But remember, as I've explained to many people, just because you can do something doesn't mean you have to do it. So there's a lot of inherent resistance to it because of conservatism, the need to change systems, and actually, sadly, still the need to change the law in some countries or to understand what the changes in law mean.
Yeah.
But definitely, it's definitely that the velocity maybe has picked up a little bit. We're not roaring, we're still on a bicycle rather than in the Ferrari, but we definitely can see the road ahead.
Chipping away at MLETR. Credit insurance, what are some of the most important factors that are impacting credit insurance at the moment? And I would definitely say there's becoming more of a partnership with the insurers and the banks.
They're one of our biggest and most active communities. So the big thing that has happened from our point of view is the recognition from a Basel or bank capital perspective of the use of credit risk insurance. That it is not understood, it is not properly provided for in the current Basel rules, and the new Basel rules potentially could make it worse. So we've been lobbying very heavily in Brussels, and we're doing some lobbying actually in the US as well. If banks can get the capital relief as well as the credit relief, then that obviously makes the product a lot more useful. The insurers are all over it because they see the community, but they also see that really they're a natural fit for people who want to distribute assets. What's interesting, a lot more talk this year about not just single name risk insurance, but portfolio insurance. So this is the sort of stuff that goes on already in the sort of the unrated SME market. But looking at that, so again, using technology, we have an InsurTech group. Using the technology to actually manage much bigger pools of receivables without having to do single names, and so therefore being able to insure much bigger portfolios.
Thank you very much. And I guess extending on that from a regulatory perspective, so we talked about Basel IV and recognition in markets such as the US. Are there other market practice changes that you've seen perhaps around Solvency II, etc., that are impacting the trade finance industry that we need to know about?
So I think you probably have to ask the insurers. There's a lot of work going on around Solvency II. Yeah, that's. I think Brexit has helped them, has both helped and hindered them. Actually, take that up with them.
Thank you. Final one, originate to distribute.
Yes.
And I know distribution has been a key theme throughout the conference so far. If stricter regulation may make access to financing harder, how has the originate to distribute model proven, is it proving a successful strategy for actually opening up sources of liquidity?
Yeah, again, that touches on a lot of things we've already talked about. So it touches on non-bank investors. It touches on the technology that you use to distribute that efficiently. It touches on whether you can actually distribute portfolios of receivables rather than individual names. As all of this is happening, all of this exists, the need for bank distribution is stronger than ever, and a lot of that is because of Basel. Bank capital is much scarcer, more expensive than it used to be, and the changes are making that even more expensive. So it's much more important to distribute that risk. But obviously, if we're distributing it to other banks who've got the same problems as us, we're going to find limited appetite. So it's really important to open up the risk takers. Those are insurance, as we mentioned, which is absolutely bloomed, and the non-bank investors, the funds, and a lot of people behind the funds. Of course, a lot of these will be private offices, sovereign wealth funds, and so on, looking for a better yield. Despite what I said about the yield problems, it's better than cash, and it's as safe as cash.
Brilliant, thank you very much. So Sean, what's next for ITFA, and are you able to share with us where
Absolutely.
next year's going to be?
So one of the nice problems we have in ITFA is that every year we have to be a little bit better, and I think everybody's enjoying Limassol, and I'm so happy that people have come to me. Last year we were in Abu Dhabi, as you know, which I thought was a great conference. Next year we will be, I can reveal to you exclusively, we will be in Singapore.
Brilliant, brilliant. That was Sean Edwards, Chairman at ITFA, here at ITFA's 50th anniversary, 50th annual conference here in Cyprus. Thank you, Sean.
Thank you.